The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. The Trader's Edge. Now, Steve Rhodes.
Good afternoon, folks. Welcome to the May 26th, the wonderful Wednesday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Hey, let's make sure we have an extraordinary one. And the easiest way to do that, well, it's to always remember that life is happening for us, not to us. That's right. When you and I make that one little 2x4 shift, well, it means we can find the gift in every set of circumstance that life is going to toss at us. Now, today, you and I, well, we're going to go check on the circumstance of these markets. We'll go figure out what those bulls and bears, what those buyers and sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know I'm absolutely grateful for your presence here. But more important than that, and that's this. During this next 60 minutes, I'm here to serve you. So feel free to pick up that phone. You can dial on in 877-927-6648. Phone lines are open. If you can't give us a call, well, we've got you covered there, too. You can always send me an email. Send it to steve@tfnn.com. Inside that subject heading, please put radio show question. Send it early. And, of course, in our Tigers Den, well, any ping will do. So let's go ahead and get this show started on wonderful Wednesday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, all the indices, with the exception of the semis, are trading to the upside. The Dow's up 61. The S&P's up about 12. NASDAQ 57. Russell 35. Semis are down 6. Trannies are up 112. Spot volatility index is trading out at 1804, well below that 50-day exponential moving average. The XAU is flat. Gold's up $4. Silver's down 13 cents. Light sweet crude off 18 pennies. Natural gas up 3 cents, and the 30-year Treasury up 4 ticks. Trading out at 158.23. Lead the charge dollar-wise, the upside. You got Mercado Libre up 33 bucks, 32.87 to be exact. Google's up 32. Amazon 26. GameStop 25. Booking Holdings 22. To the downside, the losers out here, AutoZone off 23 bucks, 1.5%. Pinduoduo, well, where'd that jump to? That's off $8. Intuitive Surgical off 8, about 1% there. Azimil Holdings off 7. Madrigal Pharmaceuticals off 8. So there's certainly things to look at. We want to look at what you want to look at, and there are no requests in here, so let's go take a look at the general market overview. We begin by taking a look at our 4-paneled equity future contracts out here just to see where is price trading. As we take a look at the ES Mini, that's in your left-hand panel. You'll see that price has found resistance. That is the top of its bearish structured daily profile. Between 41.75 and 41.96 is the largest conglomeration, if that's a word, of sellers out there. So a close above the top of that profile, so we'd say 41.97, is a suggestion of price making its way to the 42.38 level. We don't have that message just yet. If we take a look at the NQ, it is surrounded by sellers. It is holding up rather well. Surrounded by sellers because the top of the weekly profile, 13.750, the top of the daily, 13.727. So no wonder that markets are struggling to get through these areas. Now, there is that expression that Obi-Wan Kenobi loves, which is you can't bust them up, which is trying to do now. Price will try to bust them down. But is that what's going to happen? In order to bust them down, what you'd like to see is a spot volatility index that isn't trading where it is. If we take a look at the Dow equity future contract, also with inside a bearish structured daily profile. That means between the range of 34,280 and 34,460, that's where your resistance is at. If the Dow equity future contract can close above 34,460, it becomes smooth sailing all the way back to its all-time highs. The Russell 2000 having a nice day today, but really just traveling with inside this sideways consolidation out here. It's an inside bar from yesterday, so not really providing us with a ton of information. So overall, what are the markets doing? They are dealing with resistance. Well, I can't say each one of them, but we can say the ES, the NQ, and the Dow. So this price action that we're seeing here, pretty reasonable. a question inside the Tiger's Den from Ruby. Ruby says, can we take a look at the U.S. dollar index? Ruby, we can. Let's do it like this. Oh, you're on the phone. I'm sorry. We've got a phone caller. I'm sorry. Kim? Do we have a Kim on the phone?
Yeah, Steve.
Oh, perfect. Okay. Sorry about that. A little confusing for me out here. Thanks so much for calling, Kim. How are you today?
I'm fine, Steve.
And you want to take a look at what?
I'm a subscriber of your newsletter, right?
Oh, thank you.
So I bought some shares of ACB.
Okay.
And I didn't put a stop in there, so anyway, I still have shares of the ACB, okay?
Okay.
Anyway, I want to know if I can have you take a look at ACB and if I can get a stop for that.
Absolutely. So for your stop, here's what I'd like you to do. Just initially, write down the figure 51 cents. 51 cents is the last 10 days average true range. So no matter what, unless we see some kind of a top out here, which I don't see at this stage, no matter what you'd like to do is have your stop be 51 cents times, I would use 1.618. And whatever that figure comes out to, I would have my stop at that level, meaning I would take today's close, subtract from it whatever you're coming up with. So 51 cents times 1.618 is probably 78, 79, 80 cents, somewhere around there. So that's where your stop would be placed out there. That's one place. Another
from
place would be
price, right?
Excuse me?
From today's price, right?
Yeah, I would use today's close. Since you don't have a stop in place right now, I would just use today's close as that. Or if you want to get one in, just go ahead and use where it's trading right now at 853. The other option, if you wanted to tighten it up, would be to use 1.272. So those are our two Fibonacci expansion numbers, Kim, either 1.272 or 1.618. In highly volatile markets, your best bet is to use the larger stop. Now, the stop that you would be using, it's really important to have that at the time that you enter the trade, only because what it does is it helps you to identify the correct position size. So we won't go there at this stage here. Instead, let's just take a look at Aurora Cannabis, get a feel for what it's doing, try to help you identify what's good, what's bad, where price is headed to. And right now, price closed above, about 4 days ago, the top of its daily profile. That was 739. So that's a bullish signal out here. Price is trading below the weekly profile, so that tells us where our next resistance level is. And that resistance level is at 944. Any questions so far?
So on your original recommendation in your newsletter, right, your stop was 733, right?
It could be. I don't know off the top of my head, and I don't have an easy way to pull that up that quickly.
No, I have it on my record here. So
okay.
When you recommended in the newsletter, it was like 820 to buy in.
Yeah.
And the stop was 733.
Yes.
And your target was 1450, right?
Yes.
Yeah. So I was wondering, I still have several positions, several shares in ACB.
Okay.
Yeah. So I'm trying to put a new stop in there because I can't use your old stop, and somehow I didn't get stopped out,
Yeah. Okay. Yeah. So again, it would be just take 51 cents times 1.618 and come up with that figure, and your stop would be that level below where price is trading right now. We're about to go to a hard break, Kim. Can you hang on through this break?
Sure.
Okay, perfect. We'll be back with Kim. Take a look at Aurora Cannabis, ticker symbol ACB. We'll be back in just a few.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today.
Hey there, I'm Andy Arbertine with Tiger Precious Metals and Stones. Whether you're looking to buy and sell precious metals or trying to find the perfect diamond ring, I'm here to help. I have over 15 years of experience with diamonds and precious metals. You can call me directly at 727-329-8245, and I will personally answer any questions you have and help you find exactly what you're looking for. I will be your personal concierge in the metal and stone business. Give me a call today, 727-329-8245.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com. Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. We're on the line with Kim from Denver. We're taking a look at Aurora Cannabis. ACB is a ticker symbol out here. So, Kim, during the break, I did just a little bit of math for you. So the stop should be 771. That's what I would recommend. And that's 83 cents below where it's trading right now. And the 83 cents is 0.51 times 1.618.
I did put a stop in this morning at 789, right? But if you go by 1.618, it'll be like 772 stop, right?
Yes, correct.
And if you go by the 1.27, right, it'll be 790 stop, right?
Yeah, perfect, exactly.
So you recommend 771, right?
I do. I do, at least at this stage. And this is the reason.
Okay.
First, let's take a look at the daily time frame chart out here. And on a daily time frame chart, this is suggesting, so where price ran into resistance last time was at $9.16. And $9.16 was the TD9 breakdown level. That still becomes your price target to the upside of where resistance is at. What you're looking for is for price to close above that level. So right now, the daily chart is suggestive that I don't see any reason for price at this stage here for it not to continue to move higher. Doesn't mean that it can't, and that's the reason why you're using the stop. But the daily time frame chart.
What's the price target to exit?
Well, that's up to you on this. 916 is going to be a real resistance zone out here. So what you can do at that stage, you can go ahead and exit. You can come back in if price closes above that, as an example. You know, it's nice to see what else is going on in the short-term time frame chart as price gets up to that 916 level. So kind of hard to say now, but that certainly would be an option for you. What we do know is we can understand by taking a look at this daily time frame chart why price stalled where it did, and it is that TD9 breakdown level of 916. If I look at now there is some other battles that are going on right now. And there's good reason to have a stop in place. And those battles are at the price point of $8.58 to $8.61. $8.61 happens to be on the 130-minute time frame chart its version of the TD9 breakdown level. I don't see any reason for you to exit the trade at this stage here. Just know that you're up at resistance. We may not be able to even clear this today, but you're into a resistance zone, both on the 130-minute chart and the 195-minute chart. But both of those, even though you're up at resistance, I'm not seeing any kind of a signal to go ahead and exit your position. And for that, I just simply fall back to a 30-minute time frame. When I look at the 30-minute time frame chart, I don't see any kind of a topping signal. So that's why it looks to me like on a daily basis, okay, you're up at a resistance level. We know where it's at. We're not seeing any kind of a signal that says that this should be a top in some type of retracement. So you should be able to get price up to the 916 area.
916, right? Okay.
Yeah,
Yep.
yeah. Does that help you out?
Yeah, so I appreciate that. And I met you like when Tom came to Denver, like 10 years ago. Yeah.
Yeah. Time flies, doesn't it?
I know. Yeah. Anyway,
Yeah,
I enjoy your
absolutely.
newsletter. Anyway. Yep.
Well, thank you, Kim. I appreciate that very much.
Yep.
And thanks so much
All
for
right,
calling
we'll
and
stay in
saying
touch.
hello. You bet.
Thanks for all
You
your
bet.
help, okay?
You're welcome. You're welcome. That was Kim
appreciate
in Denver. So now let's do this. Just before so I don't forget this, Ruby had asked about taking a look at the U.S. dollar index, and we can do that a number of different ways. One of the ways that we can look at it would be by me finding the right tab here, and that right tab. Where is that right tab? Here we go. So here's the daily, here's the weekly, here's the monthly, here's the quarterly set of profiles. And what we also know is that price had fallen below the bottom of the daily profile. It had fallen below the bottom of the weekly profile. It had fallen below the bottom of the quarterly profile. It looks like, man, the dollar's just going to get trashed. Not so fast. There's one more area of support, and that's on the lower left-hand panel. That is the monthly time frame. And price and trend lines work. Price moved back to that trend line. So far, this has held support. On a daily time frame, although this chart here doesn't show the trend line out there, a price is going to need to close above 90.25 to give us some kind of bottom signal out here. Let's go take a look at, let me get this set up. It'll take just a moment here. We can take a look at the gold, the U.S. dollar, and the patterns that are in place here, because this is really super important. So let's look at the daily time frame side by side. Gold is on the left. The U.S. dollar is on the right. Now, one of the things that you can see that's going on here in the U.S. dollar index, and this is a positive, is that price right now is trading above the top of its oscillator and change line, at the top of it. It's trading above the oscillator and change line. And so this is why we say, or I'm suggesting, although I can't draw this trend line in, I do know that the trend line would fail if the U.S. dollar index closed above $90.25. So, but you've got the first positive signal right now. Now, at the same time that the U.S. dollar index is trying to generate that positive signal for us, and by the way, this was also at a TD9 breakout level. When you get through one, you typically go to the next one. That was at 89.62. So understanding these TD9 breakdown and breakout levels are really helpful to you. Now, at the same time the U.S. dollar index is trying to bottom, guess what gold is trying to do? Gold is trying to top. How do we know that? Well, it has a TD9 count that is going to fire off today, bar number 9. What we also know is if this pattern identifies a top, that it will do it on bars 8, 9, or the bar following 9. Is that important for gold? We talked about this yesterday. The answer is yes, it's important. Now, why doesn't this show up on here? Oh, the last TD9 count 8 was when we came off the bottom. We had a nice rally. TD9 count 8 brought us all the way back to its breakout level of 1679. The breakout level now would be down around the 1840 level. But first, if this is a short-term top, what we would see here is we'd see price try to find support in the 1879-ish area. That is that green oscillator and change line. But we should be aware that the way that these patterns are behaving, the U.S. dollar index finding support at that monthly rising trend line, now price above the oscillator and change line here, while we've got a TD9 count in gold. Folks, this is a time to be cautious, very much be cautious out here. What goes up can most certainly come down. Now let's go take a look at the short-term time frame charts. I'm trying to get a couple things off my screens here while I do this so that it's easy for you to see this. So just give me a moment to, oh man, how do I do that? I think I do it like this. How do I do that? Start sharing. So now we should see, I'm hopeful, we should see our 30-minute time frames for both of these same instruments. So now you've got gold in the upper left-hand panel. out here, you can see that this forms a Rhodes Momentum Indicator top, wave number 7. That's courtesy of Basil Chapman's Chapman wave out here. And if price takes out the swing point from earlier this morning, that would be a price point of about, this is gold, you're going to watch this area, 1899.20. Its signal is a move back to 1879. Now, it's only $10 out there, but pay attention. That's what's going on inside of gold. If we take a look at the U.S. dollar index on a short-term basis, this has already given us our change in trend signal. How did it do that, Steve-O? Pretty simple. Price was able to close above its first TD9 breakdown level. See how this topped with bar number 8 out there? Price pulls back to the breakout area. So these patterns repeat over and over and over again out here. Let me update this. Why isn't this chart updated out here in gold, the U.S. dollar? And right now, what the U.S. dollar index has done, Ruby, it's run into the second level. That second level is 90.03. We're traded at 90.025. So price is up at this resistance area, close above 90.03. Now, if anything on the charts to suggest that that won't happen, will continue to suggest a strong momentum move for the 30-minute time frame inside the U.S. dollar index out there. So for all you gold bugs out here, and I'm one of them, it is time to be very cautious and very careful, because the patterns here are suggesting that we should see some type of short-term top today or tomorrow. We'll be right back.
Hi, folks. This is Tom O'Brien. The printing presses are working 24 hours a day, 7 days a week. The U.S. deficit has risen 200% in 1 year with no end in sight. The markets are looking for an additional stimulus bill to get us through this once-in-a-generation pandemic. There is no free lunch, folks. The more stimulus dollars put into the marketplace, the less your dollar is worth each and every day. This is the time to protect yourself with a portion of your portfolio in the metal market. The Gold Report comes out each Monday morning. I bisect and dissect the dollar, silver, gold, the XAU, and the HUI. The Gold Report is a long-term hedge against the dilution of your buying power. The U.S. has put more than $6 trillion into the marketplace in the last 6 months, with more expected in the next few months. The market did and does need the stimulus, but it will have long-term implications on our buying power. The Gold Report comes with a 30-day money-back guarantee. Go to TFNN.com and order the Gold Report now. Protect your buying power. Order the Gold Report now.
You could be making money off the stock market. And if you're already making money off the stock market, you could be making a lot more. Check out TFNN and Tiger TV and get expert investing advice to give you the power to control your financial future. Go to TFNN.com and find the newsletter for you. Whether you're into trading gold, metals, futures, currencies, or options, you'll get advice and analysis to help you seriously get ahead. TFNN also features trading services with a 30-day money-back guarantee for new subscribers, as well as TFNN's Tiger Den trading room, trading software, and educational webinars for all trading levels. And make sure you check out Tiger TV for free on TFNN.com or TFNN's YouTube channel for live financial content from 8:30 a.m. to 4 p.m. Eastern on market days. Stop watching on the sidelines while other people get rich and become the investor you were born to be. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's up 60, S&P's up 11 points. Let's go to our next question, the only question we've got in the queue. So phone lines are open, email lines are open. This one is from Hector and the Fuel Injectors. Hector says, happy, wonderful Wednesday, back at you. Isn't the VIX screaming the markets are ripping higher? Please, if you can do a twofer, take a peek at Facebook so we can. What are the time frames showing us? So let's go take a look at the spot volatility index first. And the answer to your question is no. I don't think the VIX is saying that we're ready to scream higher. And the reason is this. You're going to have to trust me on this one. And the trust is that at the price point of 1620, that is the low from April the 9th. That is a TD9 breakout area. And not until price gets below that, Hector, yes, the price of the spot volatility index is below its 50-day exponential moving average, 1986. And so that is certainly bullish to neutral for the S&P 500. But really, you still have just the VIX. I'm going to use the VIX just like we do any other chart, Hector. So that way I can maintain, hey, we're agnostic to what it is we look at. We just use the exact same set of tools and let those guide us. So if the spot volatility were trading below 1620, then my answer to your question would be absolutely. Now, if price is going to go from 1796 to below 1620, you're going to get your screamer too, or you should get your screamer. So I hope that helps answer that question. And at the same time that we have that, what's also important to understand, and you get this, is that the ES Mini is trading right into substantial resistance, the bearish structure of its daily profile. And if it gets above that, then the top of its weekly profile at the 43.28 level. So that's what I see when I try to put together the spot volatility index with what's also going on with where sellers reside inside the ES Mini. So I hope that helps you out with regard to that specific question. Now let's go take a look at Facebook out here. And if not, write me back, and then we'll figure out how to provide you with the information, the answers that you're looking for. Right now, we're going to take a look at Facebook. And Facebook is trading out at 329. Facebook is trading above the top of its daily, weekly bearish structured profile and monthly profile. So in this case here, price is ready to potentially scream higher. Now I say potentially scream higher because we have to see where is price trading into. And on the daily time frame, there was a huge gap up to the upside, high volume high. Hector, you may have even brought this to my attention. That was on April 29th, and the high there was 331.81. Now you're moving into that swing point, which had 56 million shares. Right now you're at 6.3. So what we don't know is if price is going to be able to take out that high. By the way, that high is 331.81. If price did close above that, well, that would be a beautiful thing. But know that Facebook is running into some resistance on the daily time frame, just simply a prior swing point without much in the way of volume behind it. Let's look at our white background charts. So knowing that, it makes it even more critical when we take a look at Facebook to know that today is going to become day number 9 of a TD9 count out here. Now, the last time that there was a TD9 count high, well, the last 2 times, one took place in the bar following 9. That was on March 22nd. The other one was on April the 8th, and April the 8th, that was on bar number 8. And then that turned out to be a TD9 count bottom, bar number 8. So what you and I, Hector, know about Facebook is it respects the TD9s out here. And that suggests Facebook coming into a prior swing point, lighter than the loafers out here, got a TD9 count top. We should see Facebook top out today or tomorrow. Has it topped out yet? That would be the question. Well, to answer that question, we would go to a short-term time frame chart. Well, we put up the 30-minute chart. You don't see any kind of support that has been broken. So the answer is no. We do not have any kind of a signal of that short-term top as we speak right now. But know that it's likely that takes place today or tomorrow. It doesn't have to, but likely that it does. Now, that first retracement should take price back to that oscillator and change line. And that's right now printed at 323. And below that, then you'd be looking at 310, 305, and 300. So that's what we see when we take a look at the daily time frame and the 30-minute chart for Facebook. On a weekly basis, price is approaching that same swing point area on lighter volume, but I don't have any kind of a topping signal here. So watch the daily, watch the patterns there. Again, it's not a guarantee of a top, but we have everything in place, just like when we took a look at gold and U.S. dollar. Everything is lined up into place for us to see at least a short-term change in trend. Let's go out to Mark in Fort Collins. Mark, thanks for holding. Thanks for calling. How are you today? Oh, do we have Mark? Hey, Mark, I heard you kind of cut in and out. Let's give this another shot out there. I don't know if it's my system or yours. I'm hoping that it's neither of ours, and you can hear me okay.
Hello?
Yeah, Mark, I got
Sorry,
you.
I accidentally hung up. Wanted to talk about one we were in that I'm interested in maybe getting in again. Let me know what you think about Clovis. Is it doing testing some support, high volume support on a weekly from back in early March, and then there's another weekly that came in at the same price in early May.
Yes. So if we take a look for where support is at, Mark, we would come to our weekly and our monthly time frame charts, at least initially. And the weekly shows that price has support or should have support at 508. And right now price is trading at 508. So that's the bottom of its weekly profile. So we know that this is where sellers are at. It's not a bullish or bearish structured profile. If anything, it leans just slightly bearish. For a bullish structured profile like the monthly, we'd feel even better. Now, the monthly's area of support on its bullish structured profiles at 463. So you're at 463 there, 508. I would say if price closes below 508 today, maybe the signal isn't clear just yet, and perhaps that area would be 463. So that's what the profiles are providing us with, that information. Let's take a look at the daily time frame, see if we can find any other signals out here. And today should become bar number 7 of a TD9 count. So as prices coming into these support areas, by the way, the next level of support on the daily time frame is all the way down at $4.13. Now, I'm not saying that price will get down there. The last TD9 count, which is what I believe got us into Clovis Oncology out here, lasted for about 4 or 5 days. Price is below that level as we speak. No, it's not. Well, let me see. That price point exactly is 503. So it's not below that, but you're in bar 7 and you're not in the trade right now. I'd rather wait for a couple of days to see if a TD9 count forms here as well. And then look for some kind of turn on a 30-minute time frame chart. Right now, the confirmation of a turn on a 30-minute time frame chart, if you were going to go ahead and take the trade today, you would want to see price close above $5.13. So another about 5 cents from where we're trading right now. And the reason I throw that in there, Mark, is because on the 30-minute chart, you do have a TD9 count. That took place at about 2:30, 3 o'clock yesterday afternoon. But where price ran into resistance as it about 10, maybe this is a couple days ago, is right at the top of that profile at 513. Does that help so far?
Yeah, that's great. Appreciate it. I was just kind of poking around and looking for some opportunities, and it's good to be patient, and appreciate you helping me with that.
No problem. So and you're a good chartist out there. So watch that 30-minute time frame chart for sure. But it looks like maybe this might bottom out within the next couple of days. So give me a call back on Friday. Let's take a look at it.
Perfect. Okay. Have a good one. Thanks.
You bet. You too. That was Mark in Fort Collins. Steve Rhodes with TFNN. We'll be right back, and we'll go take a look at the Russell 2000.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Let's go out to Martinez, California, and speak with Brent. Brent, thanks for calling. Thanks for holding. How are you doing this morning?
Oh, I'm doing fantastic, Steve. I
Excellent.
appreciate you taking the call.
Sure, sure. I know you'd like to speak about the VIX too. Tell me how I can help you there.
I guess my main question was, and I believe we may have discussed this in the past, about the ABC pattern on the VIX. And I recall, I think you, in your work, you mentioned that the TD9 count had more relevance, but it looks like there might be something as far as the ABC pattern setting up in it at present, and it would kind of, I think the number on the D point would be down around that 16, so I was hoping you could look at that.
Sure. So for the A to B equals CD pattern, are you using the high of May 13th, the low of May 14th, the high of May 19th?
Yeah.
Okay, so that would come out to 1569 is the way that I see it at this stage here. And was that your question?
Yeah, that would be a level I would be watching. That would more or less, I mean, I know it's not the exact number that you mentioned, but it's in that range.
And would you use that? Would you use that at that stage if it completed the A to B equals CD? Would you use that as a signal to take a short in the S&P, or how would you use that?
I would actually just use the VIX. I just buy calls on the VIX.
Got it. Okay. So then in that case, and thanks for that clarity, here's what you'd ideally then like to see. So knowing that you're waiting, you're fishing for this, you're waiting for price to pull back to get to that 1569 level. Should that happen, what you would like to see when that does occur, you'd like to see it hit that area and then close back above 1620. 1620, I did make an error when I spoke earlier about the VIX. I think that might have been to Hector. I said I believe that 1620 was a TD9 breakout level. Now that I pull my VIX chart up, I know that it was the low of that TD9 count pattern. So you'd still like to see that area hold out there. And then I think that would give you the better signal to go ahead and take those call options in the spot volatility index. So 1620 is still a real key level, in my opinion, for us to be watching. As far as the A to B equals, go ahead.
I was going to say I'll see if that does come together. But go ahead and finish your thought there.
Well, I was just going to try to come back and try to look for other A to B equals CD patterns out here. And I think when we were looking at it or discussing it, it was hard to see A to B equals CD patterns that came to fruition, and the spot volatility index. I thought the TD9 count. Let me pull over the spot volatility index chart out here. Had better signals. Not that they were all that great out here with the spot volatility index. I still believe the best signal is, hey, where's the trading relationship to that 50-day? But we can see back here in August of last year was a TD9 count bottom inside the spot VIX. It was a TD9 count top that identified the top in the spot volatility index out here. There was another TD9 count that really is that 1620 level that we're using right now. That TD9 count, because the bottom was never taken out, that sent the VIX all the way up to the highs that we saw last week, early last week, or the end of the week before that. So the TD9s are working pretty well out here, more so than what I've been able to find versus the A to B equals CD to the downside. But in this case here, you may be able to get them both, which would be nice.
In your mind, do you think, Steve, it has more to do with just the erratic nature of the VIX, that it wouldn't really set up the ABC pattern, or what's your thinking there?
Yeah, I don't know. I don't even have a clue to try to figure it out. Instead, I believe when you may have asked me about that question, it was just going back and looking at the chart patterns and trying to see how often could I find an A to B equals CD that actually came to fruition. Now, we can go back and look at these things, and maybe they come to fruition eventually, but you and I, we're not looking for eventual. We want information right now, in essence, that we can act upon out here. So I don't have an answer for you there.
All right, thanks so much, Stephen. I appreciate you doing the work on the gold too. I'll keep an eye on that as well.
Yeah, absolutely. Right now you've got gold trading down $6 out here, and so longer term, yeah, things look great, but we've got to be careful because we've got those topping signals in it, and potentially a bottoming signal in the U.S. dollar index.
All right. Well, thanks so much, Stephen. Enjoy your time off.
You bet, and always great to hear from you. That was Brent in Martinez, California. Our next question was, let me see if I can get back to it. It was on this instrument right here, this instrument being DKNG, that is DraftKings. And I believe the individual is looking for an entry price. So right now we would say you're not going to enter today. And the reason we would say that is because, hey, it looks good on the daily. And it does look good on the daily because price is above the top of its daily profile. Closed above it 3 days ago, so that looks good. And that was $47. But price is running into resistance, and that is the top of the weekly profile, $49.55. So on DraftKings, what you're going to be looking for is some type of retracement to buy into. And in order to see that, we would go look at our short-term time frame charts. Now, we have a Rhodes Momentum Indicator top that formed. This was at about 10 o'clock yesterday morning. Price pulled back a bit, and then we're back up at those highs. We're back up at those highs at 11:30 this morning. Now, that high is still in place. What we don't know is this going to just be a consolidation in DraftKings, and by a consolidation on a 30-minute time frame chart, find support around 47.28. Maybe it's 47.28 to 47.89. I'm uncertain because we have to see how the pattern plays out, how price plays out. But that's the first thing that I would be looking for is some kind of retracement and pattern setup on the short-term time frame. If price were to close below the swing point from, this is the 30-minute chart, from 47.28, then what you would do is you would wait for 44.34. 44.34 on a 30-minute basis is the TD9 breakout level. On a 15-minute chart out here, really the same kind of pattern we just looked at, so nothing new there. The 65-minute chart is suggesting it has triggered a Rhodes Momentum Indicator signal, but no bearish reversal candle yet. I don't see anything. Oh, we've got a TD9 count on the 130-minute time frame chart. So, yeah, you're going to sit tight here to see if this thing will retrace. There's enough signals to suggest that it should. Now, where's that entry point? Look, in lieu of some type of pattern on a short-term time frame, you could always use the top of the profile, $47, or the ultimate retracement for you inside of DKNG, because price closed above a bullish or bearish structured daily profile. A retracement or a counter trend move into the center of that profile at 45.23, that would be the ultimate area to take a long trade or to try a long trade inside of DraftKings, DKNG. So I hope that helps you out. Let's go take a look at our next request out here, which was from Ruby in the Tiger's Den. And Ruby's asking about the Russell 2000. And her question specifically, I believe, was, can we make this statement now that price is going to make its move up to the 2300 area? And the answer that I have here is no. I can't make that statement. And the reason why I can't make that statement definitively at 1:50 in the afternoon is price hasn't even taken out yesterday's high, Ruby. This is just an inside bar at this stage here. It may be a good setup, but it's not like we have any kind of a breakout message going on inside the Russell 2000. If I look at its short-term time frame chart out here, short-term being the 30-minute, what do we have? You've got a TD9 count that could be setting up between now, meaning 2 o'clock, and about 2 and 2:30. This isn't the end of the show, is it? No, I think we come back for one more segment. Steve Rhodes with TFNN. We'll be back to close things up in just a few.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Markets can rise and fall like the tides. Subscribe to Basil Chapman's newsletter, The Opening Call, and you too can ride the wave. Basil Chapman is an authority in technical analysis. His Chapman Wave trading system has been helping traders identify trends and capitalize on momentum in the markets since 1984. TFNN invites you to test Basil's proprietary Chapman Wave trading methodology with a monthly subscription to the Opening Call newsletter for only $149. Your subscription to the Opening Call comes with a 30-day money-back guarantee, as well as daily market updates on key indexes, stocks, and commodities. Ride the wave. Sign up for the Opening Call risk-free today.
Introducing Primal Edge.
Today, it's even more important to take a supplement that complements your health. Primal Edge is specifically formulated to boost your immune system and help with weight loss, better sleep, stress reduction, and the need to detox.
Our early ancestors found all their nutritional requirements in the wild environment. But today, our food sources don't contain the vitamins, minerals, and nutrients that we need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated humic and fulvic acids, nature's preferred delivery system. They've been called miracle molecules because, like sunlight, air, and water, without them, life cannot exist.
That's right, Ellen. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, just $89, exclusively at TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Let's go take a look at, I meant to do something and I didn't, and I don't know how that happened. And so a couple of questions that we have. One from John in the Tigers, and he's asking about the July contract for coffee out here. Trading right now 155.95 and trading above its prior swing point. That prior swing point out here was from May 6th. That high was 155.40. So, John, there's an A to B equals CD. This is the first level of that A to B equals CD leg. You can see how coming off the C point, that retracement was about a 58% retracement out here. You can see the move off of this C to D leg is super strong. What I mean is price on the left-hand side versus the right-hand side of that line. This suggests a move up to 165.75. And that is the coffee contract. The next question coming in about Chevron, and the question there is from the golf guy is you're looking at the COMEX, CX, and international. I won't be able to read this full question here. Let me just take a look at Chevron. And we can see Chevron has a Rhodes momentum indicator top. It has just simply led to a consolidation with inside its daily profile. The area to be watching here in ticker symbol CX. Oh, that would be CVX. This is CX. What is CX? Regardless, CX, the area you're watching here is 785. If price closes below 785, what you're looking at is a move down to 734. I don't know what CX is. Let me come back here to my 3 time frames if we can get there quick enough. CX is CMEX. Okay, so with regard to CMEX, and I'm not sure why you were looking at COMEX for buy. In any event, with regard to CMEX, it's got that support at the 785 level. So, folks, stay tuned for a couple more great hours. I'll be back with you on terrific Thursday. I want you to have a wonderful Wednesday. Be safe out there. Get outdoors. Get in that sunshine. And just have a terrific day. We'll see you tomorrow.